taking up the journey at all.
Watch us live in conversation with Ramdev Agarwal on 31st October at 11 a.m. as we discuss the power of quality in the process of investing. Send in your queries using the hashtag AskBQ to BloombergQuint.com. Write to us now. Use the word Ramdev in all your queries.
Good morning. You're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak on the FNOQs. I'll talk about the general trade setup. So let's get started. The SGX Nifty is not giving the best outlook at this point of time. It's down almost 23 points. So that's the first cue that you have to watch out for, because Asian markets led by, Nikkei, by the Japanese markets are not doing well. So the SGX Nifty is indicating we might have a slightly muted opening in trade today. Let's see how the ADRs panned out in trade. The ICICI Bank ADR was up almost 3%. So ICICI will be in focus. Apart from it, Tata Motors has been gaining on the ADR side. But on the weakness side, on the weaker side, you had HDFC Bank, which fell in almost 1.5%. As far as how did the crude pan out in trade, oil is trading muted. Overnight it did manage to gain almost close to 1%. But right now in morning trade, it's muted. Brent is trading about the $60 per barrel mark, and WTI continues to hold above the $54 mark in trade. So oil is something that is rather strong in trade. So you'll have to watch out for oil-related companies. Mixed close by the base metals on the LME. Some of the counters which did extremely well, which did well on the LME were copper, zinc, and nickel. They gained. The others like aluminium, lead, tin, all these saw a lot of losses that came in on the LME. Shanghai has opened, so steel is opened 1% lower in Shanghai. Even some of the metals and some of the ancillary metals like base metals like copper is trading up higher by almost 0.3%. Let's take a look at gold. Gold has snapped its 2-day winning streak. It had been doing well, but in morning trade it is trading rather muted. Fund flows, FIs were net sellers in the cash market. They sold in 186 crores, and DIs were net buyers to the tune of almost 139 crores. So it's the same story that's happening again. FIs selling, DIs buying. But on a month-to-day basis, after the big bank recapitalization buy that happened, FIs have been net buyers on a month-to-date basis in the cash market. DIs have bought in almost close to 10,000 crores in the cash market as far as this month is concerned. Today is the last day of the month itself. Now, as far as what the trade setup is, the WIX yesterday surged almost 5.5%. That was interesting. Apart from it, the broader markets did extremely well. So the mid caps, the small caps did much better than the benchmark indices. IT and FMCG were the two sectors which were trading rather muted in trade. What contributed to the Nifty? You had counters like HDFC Bank, Reliance, TCS, L&T, so all the large caps contributing to the Nifty. On the weaker end, ITC continues to be under pressure. FMCG, HUL continues to be under pressure. So that's the broad trade setup. Agam, what's the FNOQs like?
Well, Darshan, there'll be several other stocks which will be in focus on the back of earnings. But when it comes to the Nifty, as Darshan just mentioned, we are looking at a slight uptick on the back of which there has been an increase in open interest in the Nifty futures. It is the same for the Nifty Bank futures as well, where we have seen an increase of 3.5%, while the index itself also moves up by as much as 0.6%, which means we have seen fresh longs building up in the Bank Nifty futures. But moving in, we are also looking at the India Volatility Index, which has moved back about the mark of 12, up as much as 5.6%. And considering the Nifty has moved up, we're also looking at the Nifty put call ratio also moving up to a certain extent around the mark of 1.42. So there you have it. And but in terms of change in open interest for a lot of these options, as you can see here, there has been substantial amount of writing in the 10,100 put and a little more writing in the 10,400 call. So some amount of resistance building up there. Moving in, what are we keeping an eye on? Well, as you can see, Bata India has seen about a near 39% increase in open interest towards fresh longs. And similarly, we are also looking at fresh longs in Jet Airways, along with the rest of the aviation pack, which has been extremely active in today's day of trade.
Stock of the day has to be Bharat Electronics. Now, good show there. The company reported a net profit of nearly 412 crore as compared to a Bloomberg estimate of 267 crore. That's a big beat coming in there. Net profit has grown as much as 19% at 412 as compared to the base year figure of 346 crore. Revenues have also risen for that matter. The company has reported a revenue of 2,476 crore in this quarter as compared to the base quarter of 1,703 crore. EBITDA have risen as much as 76% year-on-year basis to 595 crore in this quarter as compared to 338 crore figure. Margins have expanded at 24 as compared to 19%. So what led to an impressive set of numbers there? A is the top line growth, which has worked out well and has percolated down to the operational efficiency. Along with that, we are also saying we also saw a decline in finance costs, almost negligible finance cost for that matter. This is despite the halving of almost the other income has dropped by as much as 70% year-on-year basis. To give a little bit background about the company, it's a Navratna PSU defense company, which is a market capitalization of around 43,000 odd crore, and the company is a debt-free company. However, in terms of stock performance, it's not a great picture on YTD basis. The company has just fetched a return of around 42%, but on year-on-year basis, but on 1 year basis, the company has given a return of nearly 47% for that matter.
Well, talking about the rupee and bond and commodities as well, first talking about rupee, it ended higher against the US dollar yesterday at 64.85 levels against the US dollar after touching an intraday low of 64.95. Now, after local equity markets closed higher for the 6th consecutive session, also Asian currencies were trading higher as the dollar declined 0.3% ahead of the expected announcement of the new US Fed chair this week. Also on the global front today, traders will focus on Bank of Japan's policy meet, where the central bank is expected to leave policy rates unchanged. However, according to a Bloomberg report, they're expected to trim their inflation outlook. Now, back home, dollar rupee is trading flat in the non-deliverable forward market. Speaking about the bond market, the 10-year benchmark yield ended 8 basis points higher at 6.88%, its highest level in over 6 months. And finally, global funds increased their rupee debt holdings for the 5th consecutive session yesterday. They infused close to 950 crores according to NSDL data. Now, that said about rupee, Jayesh, what have you picked up for commodities? How are they performing today, and what's buzzing there?
Once again, the dollar is at play. So with that, we have seen gold prices actually rebound a little bit because the dollar index has actually slipped below the 95 mark. So the dollar so the gold prices actually climbed to about 1275 the last time that I checked. Also, base metals rebounded on LME. So we had the likes of zinc, copper, nickel, which were up in trade on LME. Tin declined more than 2% on the London Metal Exchange. Base metals actually are trading mixed when it comes to the Shanghai Futures Exchange. Copper and zinc are trading with a positive bias. However, aluminium and steel are trading with a negative bias. In fact, steel is the biggest loser with a cut of more than 1%. As far as oil prices are concerned, we've seen Brent extending their gains to beyond the 2-year high, as the market is now focusing on the OPEC deal. Also, we have seen that oil exports have resumed from Iraq's Kurdish region, which were actually halted yesterday. JP Morgan has come out with an interesting report in which they have raised their target price on both versions of oil. So Brent, the target price has been extended by $11 and WTI as much as $11.4 per barrel.
Well, Axis Bank will be in focus on the back of a Times of India report which suggests that private equity investor Bain Capital, along with some of the other investors, are looking to buy stake worth $1 billion in Axis Bank. We'll also have JP Power Ventures, which will be in focus on the back of an ET report which suggests that Brookfield and Resurgent have bid for about 7,000 crore for JP Power assets. Yet another smaller companies Zen Technologies has won an order of about 224 crores from the Government of India. The market cap of the company itself stands at about 300 crores. The other part, on the back of bulk deals, you'll also have PI Industries, which will be in focus after Katrika Capital sold 3.2% stake in the company yesterday. They are a big investor and they held about 5% stake as of 30th September. Now, there are also a couple of results which came out after market hours. Among the strong ones, you had Bharat Electronics, where revenues grew 45%, EBITDA grew at a much stronger 75%, with a margin bump up of about 400 basis points as well. Next, we also have Lakshmi Machine Works, where revenues fell about 1.4%, but EBITDA grew at a strong 21% on the back of lower raw material costs. On the back of weak earnings, you have LIC Housing Finance, where the net profit fell 1%. In fact, the net interest margins for the quarter were also at least a 10-quarter low. We also have Syntex Industries, where the revenues jumped as much as 70%, but EBITDA fell 10% on account of higher input costs. And lastly, you also have Astra Microwave, where the revenues fell 39%, EBITDA fell 31%, and the EBITDA margins also took a big knock. So all of these companies likely to react in trade today.
Disappointing set of numbers coming in from Tata Steel, at least in terms of operational front, but then we're seeing a positive outlook for the company in the remaining half of this financial year. Just to quickly run you through the numbers, revenues have grown up at 25% at 32,464 crore as compared to the base quarter figure of around 25,921 crore. This is pretty much in line than what we were expecting. Net profit came in at 1,018 odd crore as compared to a loss figure of nearly 49 crore. Now, we were expecting profits around 1,600 crores, so there is a big miss coming in there. That's basically on the back of the disappointing operational performance that the company saw. EBITDA although rose at 53% at 4,726 crore for this quarter, but then it was way lower than the estimates, the Bloomberg consensus estimates of roughly a figure of around 5,200 plus. Margins came in at 15% as compared to a 12% figure. So what led to the disappointment? Well, the lagged impact of higher steel prices and the decline in raw material cost led to this disappointing operational performance. This, besides that, lower spreads in European business also dented the operational profitability of the company. If you look at the EBITDA per ton, which is the key metric that we look at for the steel companies, for the European business on sequential basis, that has declined to 2,900 rupees as compared to nearly 5,210 rupees in the previous quarter. But on the other hand, if you look at the Indian business, EBITDA per ton has increased to roughly around 11,080 per ton as compared to 10,620 in the previous quarter. Also, on the con call, the management guided that the second half of the financial year looks way better for the company, including its European business. The European business may remain muted in quarter 3, but then we do expect, the management says that they do expect to do well in terms of the European business in the quarter 4 of this financial year.
In the second quarter, Bharti Airtel is expected to come out with a weak set of numbers, with revenues marginally falling to 21,754 crore rupees and net profit falling over 4% and EBITDA falling over 3% to 7,558 crore rupees. Margins are expected to decline by around 60 basis points to 34.7%, while net profit is expected to decline by 4% to 351 crore. Now, average revenue per user, that is a key number for a telecom service provider, is expected to decline by 5%, and this will be the fifth consecutive decline for the company, and it is expected to come in at around 146 rupees. Now, the reason behind such weakness in second quarter is that second quarter is generally a seasonally weak quarter. Now, along with this, higher tax rate under GST and the continued competitive pricing by Jio has made it more worse for the telecom service provider. Now, company's EBITDA would decline for the fifth straight quarter and margins would come in at 8-quarter low. Now, the key things to watch out would be management commentary on capital expenditure for the second half of financial year 2018, commentary on bundled phones, impact of lower interconnect usage charges on the company, and commentary on timeline and completion of the recent acquisitions done by the company, and update on further stake sale in Bharti Infratel will be keenly watched by the street.
Okay, Dr. Reddy's will come out with numbers today. We are expecting a 5% growth as far as the top line is concerned, but it will be muted as far as the margins and the bottom line is concerned. We are seeing an 8% decline on the bottom line and margins coming in at almost 16.2% versus 18.6% last time around. Mainly weakness will be seen in the US markets. We're seeing a degrowth of close to 5%. India will be strong. We're seeing a growth of almost 25%. The other markets, Europe and Russia, will be seeing growth of 25% and 15% respectively. Now, competition and weak pricing pressure is something that will impact the US business for the company. They've launched several of the new products, so that will actually help dent some of the issues as far as competition and pricing are concerned in the US. But restocking is something that will aid revenues for the company, that will aid the India business, because the first quarter we saw a significant amount of destocking that came in. We also need to watch out because they had done an out licensing deal, if any of the financials of that is reflected in this quarter or no.
JSW Steel is expected to report a 20% growth, about 20% growth both on top line as well as bottom line front. On EBITDA side, we're expecting a 9.5% growth. However, the margins are expected to contract a little bit, maybe a moderate a little bit for this company on YOY basis. Just to quickly run you through the numbers, net profit is expected to rise as much as 42% at 1,032 odd crore for that matter, and EBITDA for that matter is expected to grow by 9.5% at 3,239 crore. The margins are expected to stand at 22% as compared to 20.3% for that matter. So roughly we're looking at a good set of numbers for JSW Steel. Just in terms of EBITDA margin, we are looking at some kind of moderation there. Now, high domestic steel prices are expected to aid the top line growth of the company. This, along with low raw material cost and strong realization, is also expected to lead to better operational performance of the company. But just like Tata Steel, we are also expecting a lagged impact of lower raw material cost and higher steel prices. So that will be something that we'll keep an eye out on. Standalone EBITDA per ton for Indian business is expected to grow by as much as 10% YOY, and the volumes are seen higher by 2%. As I just mentioned earlier, we are going to be keeping an eye out on the consolidated operational performance and also coking coal cost and the lower raw material prices.
Now, Mahindra Logistics IPO will be opening today. The company is looking to raise as much as 829 crore rupees at a price band of 425 to 429. The market capitalization of the company post listing would be close to 3,000 crores. Now, it is an entire offer for sale where the promoter Mahindra & Mahindra and two other investors will be offloading shares. Now, Mahindra Logistics is one of the largest third-party logistic company, and it follows an asset-light business model. So, what does asset-light business model mean? Asset-light business model means that most of the assets that the company is using for operations are not owned and taken on lease. Now, if you see the revenue of the company, it can be broadly divided into three different categories. First is by segment, second is by client, and third is by source. Now, if you see supply chain management contributes around 90% of the revenue, and it has grown at a CAGR of around 19% over FY15 to FY17. Now, the auto clients contribute around 63% of the total revenue, and they have grown only at a CAGR of 7% over FY15 to FY17. Now, Mahindra Group contributes around 55% of the total revenue, while others contribute around 45% of the total revenue. And the revenue of others contributing has grown at a CAGR of 46% over FY15 to FY17. Coming to the financials and peer comparison, the company's revenue and net profit grew at a compounded annual growth rate of 15% and 17% over FY13 to FY17, which is at a faster rate when compared to its peer. But when it comes to EBIT margins, it was muted at 2.3%. Now, this is because they follow an asset-light business model. Second, if you see the return ratios of the company, they were also muted when compared to the peers. The return on equity stood at around 13%, return on capital employed at 16%, and return on asset at 5.58%. Coming to the balance sheet, the company's book value was close to 49 rupees, and the total debt was very low at 53 crore rupees, and the debt to equity was just 0.2 times. Finally, coming to the valuations, the company Mahindra Logistics is expensive compared to TCI Express and Gati, but cheaper than Blue Dart when it comes to price to earnings ratio. When it comes to price to book value, the company is cheaper when compared to Blue Dart and TCI, but expensive than Gati. And similarly on market cap to sales, the company is cheaper than Blue Dart and TCI, but expensive to Gati. yesterday, IDFC and Shriram called off their merger plans because they failed to arrive at a favorable swap ratio. We have Ira Duggal with us, who will be sharing more details on the same.
IDFC Limited on Monday informed shareholders that they have called off merger talks with the Shriram Group. These were talks that were announced way back in July, and the plan then was to create a mass retail financial conglomerate, as the top managements of each of these companies had detailed. Now, the deal didn't fructify. A lot of people would say that's not a surprise because it was an extraordinarily complex deal that they were trying to put together. It was complex structurally, it was complex regulatorily as well. Structurally, remember, the plan was that Shriram City Union Finance would be merged into IDFC Bank, but Shriram Transport Finance would be merged into IDFC Limited, which is the holding company of IDFC Bank. On top of that, the insurance businesses were to be held by IDFC Limited. In structuring the deal this way, you had to ensure that the shareholders of 4 listed entities, which is IDFC Limited, IDFC Bank, Shriram Transport Finance and Shriram City Union Finance, all had to be happy with the swap ratios that were finally decided upon. Eventually, that proved too daunting a task, and in the short notification and press release that they sent out today, they said they couldn't come up with a swap ratio which was acceptable to all shareholders. Earlier in the day, Bloomberg News had reported that in particular, shareholders of IDFC Limited, the Government of India and Khazana, which is the Malaysian fund, had objected to the swap ratios being discussed because it undervalued their shareholding. Apart from that, there were other complexities as well. Ajay Piramal held 20% in Shriram Capital. His shareholding had to be adjusted in a way that he did not hold more than 5% in the bank, which is as per the RBI's regulations. Plus, of course, the trust which governs the Shriram Group, the employees' trust, had to agree to the merger proposal as well. In the end, it simply did not work out. Where does that leave us now? Well, for the Shriram Group entities, those are all mature businesses. So as one analyst said, they go back to business as normal. For IDFC Bank, it's back to the drawing board in terms of how they grow their retail franchise. In a press release issued today, they said that they have made significant progress in growing their retail asset base and their liabilities base. Liabilities in particular, according to them, their CASA and retail fixed deposits are now at 7,000 crores. So they think they've made significant progress. Not everybody would agree that they have made significant progress, but they say that they will continue down that path. And if along the way they should find some other inorganic opportunities to grow, they will consider them as well.
Bharti Infratel management said yesterday that they are evaluating options to make Indus Towers either their subsidiary or a wholly owned subsidiary. Now, currently, Bharti Infratel owns around 42% stake in Indus Towers, while the remaining 58% is owned by Vodafone, Idea Cellular and Providence. Now, Infratel on a standalone basis has more than 39,200 towers with a tenancy ratio of 2.41 times, while Indus Towers on the other hand has more than 1,23,000 towers with a tenancy ratio of 2.43 times. Now, if Infratel fully acquires Indus Towers, then the combined entity would own more than 1,60,000 towers, making it the world's largest tower company with a tenancy ratio of close to 2.42 times, ahead of the industry average of 2 times. Now, the combined entity would have a market share of close to 39%, while the remaining 61% will be owned by BSNL, MTNL, ATC and other players. Now, on the synergy side, there's nothing much to cheer about because the combined entity would have limited operational synergies as they overlap their operations only in 4 circles, that is Haryana, Uttar Pradesh West, Uttar Pradesh East and Rajasthan. However, they would complete their tower footprints across India. Finally, coming to the valuations, the street is valuing Bharti Infratel at 11.97 times its 12-month trailing EBITDA, and applying the same multiple to Indus Towers, the enterprise value of Indus Towers comes to around 91,866 crore rupees, which means that the 58% stake would cost Bharti Infratel close to 53,200 crore rupees. Now, this is according to the data compiled by Bloomberg Quint. However, the exact valuations will be known only when either party comes out with an exact valuation multiple.
The choice to convert into the equity and the timeline decision is with the lenders. And we, having presented today the firm plan, each of the banks or lenders would go to their respective boards or the sanctioning authority to take a sanction of that. All of them have to convert within 210 days of the reference date, which is 2nd June. And I believe that within the month of December, anytime between 7th December to mid-December, they all will convert their debt into equity. In the company, 51% or more would be the equity holding of the strategic investor who would come through this process. And, ADA and, the promoter group would become like a public shareholder because they are no more running, they are no more exercising any control, and they're free to decide what they want to do.
Well, in terms of brokerages right now, we have Goldman Sachs on Kajaria Ceramics, where they maintain a buy with a price target cut to around 825 from 850, and this is on the back of an operationally in-line quarter, and the construction market remains muted, but they are of the opinion that they expect around 11 to 20% volumes and EBITDA growth moving forward. And secondly, we have Credit Suisse on Lupin. They maintain an underweight with the price target cut to around 900 from 920, and they say that the weak quarter with a 14% decline in US sales quarter on quarter is a little bit of a concern, and because of that, Lupin has a high risk that FY20 profits will remain largely flat going in.
Consider reading on the website bloombergquint.com. First up, leading online grocer Big Basket has raised $13 million from existing investors as it nears a funding deal with Alibaba and its Indian associate Paytm. The company is also in talks to raise $200 million from the latter, that's Paytm, for a 20% stake. The deal is likely to be announced in the next 2 weeks, according to sources. And second, US President Donald Trump plans to announce the next Fed chair on Thursday before embarking on a trip to Asia. And that's according to a White House official. Trump is set to depart for a trip to Hawaii and then Asia on Friday. The president, in an Instagram video, said that he has somebody very specific in mind for the job of Fed chair. Well, that's all you need to know going into trade today. Indian Open is up next. Thanks for watching. This is Bloomberg Quint.